Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing my North American opening market comment for Friday, September 2nd. The dollar is higher against most currencies at midday in Europe. It's even up against the pound, despite the fact that the UK construction PMI beat expectations by a handy margin. I guess the fact that it didn't rise as much as yesterday's manufacturing PMI did, and it didn't go back above 50, the boom or bust line, was cause for some disappointment. The main reason the dollar is higher probably is ahead of the big event of the day, the monthly non-farm payrolls and all the other employment data that goes with it. Today's non-farm payroll figure is particularly important because it's the last one before the September meeting of the Federal Open Market Committee, the FOMC, which decides on U.S. interest rates. And the September FOMC meeting is the last one with a press conference before the U.S. election. If they're going to raise rates, it's likely to be either in September or December after the election. And if they hope to raise rates twice this year, as some FOMC members have hinted, then they better get started soon. A good labor market figure is essential for this. The market's looking for payrolls to rise by 180,000 in line with the recent trend, and a further fall in the unemployment rate to 4.8%. That's 4.8% is important because the FOMC members have estimated that 4.75% is a long-term sustainable rate of unemployment in the U.S. In other words, they think that's about as far as unemployment can fall. It's near their estimate of full employment. So if it does hit 4.8%, it would mean they've reached their employment goal. So if the NFP figure does come in as expected, watch for a rise in Fed rate expectations and a stronger dollar. My personal estimate for the non-farm payroll figure, for what it's worth, and believe me, it's not worth very much, is that it'll come in between 170 and 177,000. So it's more or less in line with the market consensus. I just derived this mathematically from using the ISM employment index component, both the manufacturing and service sector ISM indices, the ADP report, and the weekly jobless claims. Now, as usual, the best currency pair to play the non-farm payrolls is probably dollar-yen, which sees the largest increase in volatility on non-farm payroll days. Euro-dollar isn't far behind, though. Gold also sees more volatile days than usual when the NFP comes out. In contrast, sterling and the Swiss franc see relatively little increase in volatility, although that may be different today because of the construction PMI. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.